Nvidia's market value has just passed $4 trillion, almost the size of the entire German stock market. For the first time since the pandemic, small business numbers are rising again. The Nasdaq hits record after record. The White House declares, America is great again. On paper, the economy looks reborn, as if the 1980s boom has returned. Confidence, growth, optimism. But beneath the headlines and polished speeches, something feels off. Beyond the shining towers of Silicon Valley, the Rust Belt still rusts. Factories stay silent. Main Street is fighting for air. So tonight, we look beneath the illusion, to the reality of America's small businesses. What happened to them? Why did it happen? Where might they go from here? Welcome to Aquilo. Picture a small hardware store on a quiet street, or a family-owned bakery you've walked past 100 times but never entered. No flashy branding, no billion-dollar valuation. Yet together, these small businesses create nearly half of America's GDP and support about 61 million jobs, more than half of the nation's workforce. 2 out of every 4 working Americans earn their living from Main Street. They are the invisible bloodstream of the U.S. economy, from auto repair shops to software contractors, from local diners to startup AI labs. You rarely see them on the news, but you live on what they produce. After the 2008 financial crisis, big companies cut millions of jobs. Small firms quietly rehired most of them. Between 2010 and 2013, new small business formation almost single-handedly offset big corporate layoffs. That's where the American dream truly lived, in fluorescent-lit workshops, not Wall Street's trading floors. In the 1980s, small businesses built real products. 20% of them belonged to manufacturing. They supplied the country's industrial giants, Johnson & Johnson, GM, Boeing. Johnson & Johnson's Ethicon plant in New Jersey once made more surgical sutures than any other facility on Earth. It relied on 200 local suppliers and 10,000 supporting jobs. Today, most of that production has moved to Costa Rica, Ireland, and Mexico. Only a quarter remains on U.S. soil. And when factories left, so did the ecosystem that sustained them. In 1988, small businesses contributed roughly 50% of GDP. By 2024, it's 44%. But the bigger change is inside that 44%. Manufacturing share has fallen by 60%. America's small business economy has shifted from making things to selling things, from producers to service providers. The data looks good, at first. From 2020 to 2024, new business registrations hit record highs 4 years in a row. During the pandemic, the Restaurant Revitalization Fund distributed $28.6 billion to over 100,000 restaurants. Tech investment kept soaring. AI, chips, cloud computing, defense contracts, all breaking records. GDP grew almost 3%. Unemployment stayed below 4%. It sounds like everything is rising. But when you really take a closer look, you'll notice those numbers, that growth, it doesn't actually have much to do with small businesses. In the 1990s, the top 10% of companies took 55% of total profits. By 2023, they took 85%. AI, chips, cloud, and defense drive the boom, but barely touch ordinary small firms. AI brings an efficiency revolution, but not for the people who fix air conditioners or run diners. While Silicon Valley debates AGI, Main Street just hopes to pay the power bill. AI raised the average productivity curve and widened the gap between big and small. In 2015, small businesses averaged 8% profit margins, over 60% were profitable. By 2024, margins fell to 5% and profitable firms dropped to around 40%, a 35% decline in overall profitability. Revenues look fine, profits evaporate, costs rise everywhere. Materials, rent, wages, taxes, cash flow in, savings out. By March 2024, the NFIB Small Business Optimism Index hit 88.5, an 11-year low, worse than during the pandemic. Under the numbers lies a collective anxiety you can't chart. By mid-2025, the index rebounded to 100, back above average. But is it a true spring, or just a warm day in a long winter? Let's dig a little deeper. It's going to get a bit boring for the next 3 minutes, but this is where you actually see the system behind the struggle. The redistribution failure. The U.S. economy grew fast over the past decade, but the gains went upward. Tax policy, quantitative easing, and trade barriers were meant to protect local businesses. In practice, they strengthened capital concentration. Large firms use low interest rates to expand and buy assets. Small firms emerged from the pandemic carrying expensive loans. Rate hikes were supposed to cool inflation. Instead, they crushed cash flow and raised costs. More revenue, less profit. That's also why the median income for the middle class, though it's risen from about $56,500 in 2015 to roughly $74,500 in 2023, a jump of over 30%, has actually lost about 5% of its real purchasing power over the same period. Costs go up, consumers pull back. Small firms get squeezed from both ends. It's not a cycle, it's a structure. Paradigm shift. We often say society is undergoing a paradigm shift. But for small and mid-sized businesses, it's not a tech revolution. It's a rewrite of the rules, and they were never invited to the table. The World Economic Forum calls it the Fourth Industrial Revolution, while MIT professor Eric Brynjolfsson calls it the Second Machine Age. Competition has evolved. It's no longer about scale, but about models and network effects. Whoever controls the data now controls the market. AI systems, automated customer service, and algorithmic logistics are rapidly widening the efficiency gap between corporate giants and small businesses. Yet technology is only part of the struggle. The deeper problem lies in labor mismatch and the fracturing of the global order. The new workforce is built around cognitive plus AI collaboration. But small businesses are stuck in a triple trap. They can't find workers, can't keep them, and can't afford them. Meanwhile, globalization is receding, trade barriers are rising, and tariffs and carbon taxes have become new walls. Even the route to go global is narrowing fast. Three major systems, technology, labor, and geopolitics, are transforming all at once. But the very foundation small businesses rely on, financing, institutions, and organizational strength, remain unchanged, or worse, have weakened. This so-called paradigm shift isn't a ladder for them. It's a fault line. So what lies ahead for America's small businesses? Not every transformation needs to be dramatic. If policies hit the right targets and cost pressures ease a little, small businesses still have a chance to stand their ground. They're not chasing explosive growth or desperate for capital injection. They're returning to the essence of business itself, serving the people around them, rooting in their communities, and winning through expertise. They might be restaurants, clinics, tailor shops, or repair garages, the kinds of places every city quietly depends on. It's a kind of low center of gravity economy, small but focused, steady yet alive, with limited risk but enduring value. If the system can make room for these small but strong players, America will keep the most resilient part of its economic backbone. But the more realistic picture is quieter and more complex. Some businesses manage to adapt and find new relevance in changing markets. Many others, however, face rising costs, limited access to credit, and increasingly strict regulations, working hard simply to keep their doors open. They're not collapsing, yet they're not expanding either, maintaining, adjusting, enduring. This isn't a dramatic crash. There are no breaking headlines or sudden bankruptcies. It's a gradual transformation. One local shop closing, another reinventing, a few waiting for better days. The economy appears stable on the surface. The worst outcome won't be a crash, it will be a slow exsanguination. When costs pile up and policies lag behind, whole communities fade. Stores close one by one. Young people stop starting businesses. Local economies slip from slow growth to functional paralysis. No headlines, no meltdown, just empty windows and quiet streets. You'll walk down a block you once knew and realize, it's still there, but it's gone. A scene straight out of cyberpunk fiction, except it's real. The US economy now stands at the crossroads between illusion and reality. On one hand, big tech stocks keep hitting record highs, and the president and media celebrate a macro boom that feels like a new golden age. But beneath the surface, countless small businesses are struggling to survive. Some barely hanging on, others quietly closing their doors. Behind this glittering facade lies the seed of a deeper crisis, one revealed through data, not slogans. This contrast forces a harder question. Can America find a balance where the wealth of innovation and capital growth truly reaches Main Street? The millions of families, shops, and workers that make up its core? Between soaring stock prices and shuttered storefronts, what choice will America make? Wall Street's lights still shine bright, but Main Street signs grow dim. That's the illusion and the reality of America today. So what defines greatness? Is it measured by the height of the stock index or by the steady stream of customers walking into a small-town store? When grand speeches flood the airwaves, it's worth taking a quiet look at the ground beneath our feet. Because if Make America Great Again remains just a slogan, then it's the small stories unfolding on Main Street that will tell us what the economy really is and where it's headed. Aquilo is just beginning. Stay with us as we decode how business works and how it doesn't.